You guys are the big winners this week. Again, lots of likes and comments, and today I'm going to show you how testing your strategy can dramatically increase your profits. Stay tuned for it. Hi, this is Tim from TradingStrategyGuides.com. You guys are freaking awesome. Time to pat yourselves on the back. Keep the feedback coming though. I want to be sure that I'm giving you what you want on your channel, so I need you to tell me what that is. Later on, I'll be asking you to comment on the strategy testing, so please be sure to do it. Today, I'm going to show you the first in our strategy testing series. I don't plan on doing this series one after another because the content can be a bit dry, but I can't stress the importance of testing your strategies enough, and we'll be talking about that shortly. Once again, you guys asked for Forex setups, and I've got a primo one today on the Canadian dollar Japanese yen pair. And today we've also got a plethora of charts to look at, so stay awake. There's money to be made in them charts. Then later on, today's Trading Maxim will honor a new TV series. Happy Friday. Let's slide smoothly into this weekend. Remember to click the subscribe button and hit that bell so you won't miss any of Tim's Trading Maxims. Let's take a look at these charts. Our slow-moving US dollar Mexican peso trade here is locked in, and we're waiting for this PSAR to come down here below our current break-even trade so we can start trailing the stops. Remember, slow process since we're looking at weekly candles. This Euro Swissy is just being extremely cooperative. I've moved the stop down to the current parabolic SAR point right here at 107.64 to lock in 131 pips on the second half. This is turning into an awesome trade. We're approaching the point of tripling our initial profit on this one. Yep, gold is still opening and running, and it's still staying above this 1555 support level. So I'm sticking with it, looking for this 1600-ish target on it. Once again, weekly bars, so this could take a while. Well, here you go. Boston Beer pushed right up here and hit our target. Took half off, set the stop to break even right here. I turned on the parabolic SAR so that when it gets up above that break even stop, we'll start moving the stops right along with it. As I've mentioned, Bitcoin came close to hitting our target last week, but it's pulled back some this week. Pullbacks are part of our normal landscape, so don't sweat them. Looking for 93.51-ish for our first target on this one. I'm not sure I'm liking the look of this situation on platinum here. I'm long from right here at 1022.52-ish, but this is starting to look like a descending triangle right here. So I'm going to have to watch this one carefully. If the candle closes back under our resistance turn support level of $1,000 right here, then I'll be closing this trade down. And here's our sad Boeing chart. I only say sad because I'm sad for Boeing. They're having a really tough time right now. But it's kind of a glad chart for us because it hit our first target right here on Wednesday. This is a great example of what I'm looking for in these trades. We got our close below here. The momentum continued and pushed down on the very next day and hit our first target. That's the way this is supposed to work. Obviously, the real world doesn't always cooperate. And of course, yesterday we had a really big positive day for Boeing, so it stopped us out on the second half. I'm thinking this pop-up was on the news that Boeing is going to restart the 737 MAX assembly line even before getting the okie dokie from the FAA. So I guess investors like that news. We'll see how that works out. At least we're totally out of this one before this upcoming earnings statement right here. But I'll be watching for more opportunities on Boeing. The New Zealand dollar, Canadian dollar, MAX setup that I showed you on Monday triggered right here on Wednesday with a close above the purple 20 EMA line right there. And I got long. It's pushed up almost halfway to the target right here. My stop is 85.95-ish, and my first target is 87.22-ish on this one. Keep your eyeballs on the euro-Japanese yen pair that's attacking the bottom of the bear flag right here. This is a setup I showed you back on November 13th, and it could trigger a sell right here today. And lastly, sorry I failed to mention that Dish Network actually closed above the triangle last week, but it was on about 70% volume, one of these candles in here. I'm watching this. I'm thinking that this may actually be turning into an ascending triangle across here. I'll probably talk more about this on Monday if nothing untoward happens today. Okay, I think it's about time to talk about some strategy testing. Why is strategy testing hugely important? Let me give you a few background facts. Fact number one, not all indicators are created equal. Some indicators will give you early indication of a trend change, for example, and others will be a bar or three behind. Some indicators will signal an end to the trend early, some will hold on longer. Number two, a test doesn't consist of, well, this one time I lost a bunch of money because I tried to do blah, blah, blah. That is what we call anecdotal evidence, which is actually no evidence at all. Trading is based on probability and statistics. One single event is what we call an insufficient sample size. We can't know if that event is typical or an outlier or anomaly, which is just statistics speak for a one-time happening. Number three, testing is not only about finding a statistically sound strategy, but it's also about developing confidence in that strategy. I know, I'm preaching about mindset again. Boring. But mindset is very important, and you need to pay attention to this. If I've got a winning strategy, but I'm afraid to enter the trades when my strategy gives me a signal because I've lost or something, I'm just as much a loser as if I had an actual losing strategy. If I don't hold the trade for as long as my strategy dictates that I hold it because I don't have confidence in the strategy, then I'm just as much a loser like before. And lastly, you don't have to test your strategy as a whole. You can test it in pieces and replace the pieces as you find better pieces. You can test your entry strategy separate from your entry filter, separate from your trade management, separate from your exit strategy, etc. When you've got the best pieces, test them all together. Now, when I mention testing, particularly back testing, I know a lot of your brains immediately jump to the MT4 Strategy Tester. Well, I'm going to put this out there in my typical controversial fashion. Don't waste your time on the MT4 Strategy Tester. I'll talk about that in more detail in a future video, but just suffice to say that it has many issues. I don't know if any of them have been fixed on MT5. I haven't taken the time to look at it. Today I'm going to show you a quick and dirty method for testing entry indicators to find which ones get you in at the best time. Remember one huge thing here. Testing is going to take a lot of time. I mean a lot of time. Did I mention that it was time consuming? Yes. Yes it is. So get ready for it. Get a huge cup of coffee or a huge pot of coffee. Turn on some great tunes. Whatever relaxes your mind. Get ready to stare at charts for hours. When you're done, you will have accomplished several things. Number one, you may have a great entry strategy that will make you a mountain of cash. I say may because, it takes time to develop these things. Number two, you will have a brand new understanding of how the markets move and how each of the tested indicators anticipate market moves. Number 3, you will know how to fix your entry strategy if it starts to fail. Number 4, you will be ready to get away from charts for a few days or weeks. And here's the important one, number 5, you will have a skill set that will serve you well for the rest of your life. So if you spend weeks or even months on this process, it will definitely be worth it. For ease of explanation, I'm going to demonstrate this using the MT4 platform. There is a plethora of indicators available for testing on MT4. I'll include a few links below the video to places where you can get indicators for MT4. If you don't use MT4, it's okay. You can either get a free copy of it somewhere. I suggest actually looking at Owanda for a free platform and demo account. Or you can use these skills on most any charting platform. I'm going to run this test using the trade management plan that I typically use. If you've been around for a little while, you've heard it 100 times. 1.5 times the ATR is my stop loss. 1 times the ATR is my first target. For the purposes of this test, I'm going to track the results of each entry as either a winner or a loser. A winner will be when the target is hit first, and a loser will be when the stop loss is hit first. For your testing, use the stops and targets that you would use in your actual trading. If you don't have numbers like that yet, try mine. If you would prefer a different ratio of target to stop, then try that. Experiment. That's what strategy testing is all about. Try several different things. Just keep meticulous notes while you do it so you can compare the results. And speaking of notes, I use Google Sheets to track my results. And here's an example of what I would use. You can use a pencil and paper. Some people prefer that. Use what works for you. These are the details that make trading a very personal thing. I'm not just blowing smoke when I say what works for me may not work for you. If you are uncomfortable with something I do, try something different. There's no wrong or right way to do this, okay? I can advise you on unwise things like, for example, trying to use a 1 pip stop is absolutely crazy. Perhaps even using a 5 pip stop is crazy. But I say perhaps because if it works for your strategy, then it's not really crazy. And you won't know what actually works until you test it. Get it? Okay, I've run my mouth enough. I excel at that. I know. Let me show you the practical stuff now. Here's my MT4 platform. I'm not going to do any MT4 training right now. I'm only going to show you the testing method. If you guys want me to do an MT4 tutorial sometime, let me know. I'll be happy to do it. I've been using MT4 for a very long time. But you got to let me know in the comments, okay? I'm currently looking at the US dollar Japanese yen pair on the daily time frame. Use the pair and time frame that suits the strategy you're developing. For the purposes of this demonstration, I'm only going back to the 1st of January 2019. I recommend you go back at least 3 or 4 years to get a wide variety of market conditions. I've also put a few indicators on here for demonstration purposes. I'm going to start with the Arun indicator and the MACD indicator, and of course my ever-present ATR. I've included the ATR, of course, since I'm using it for targets and stops. I've included the other two so I can test them simultaneously. That makes it just a little bit quicker. I'm going to do initial quick testing on these, so I'm not going to record the actual triggers, dates, times, all that sort of thing. I'm only going to tally each win and loss to make this quick. Once I've eliminated a few indicators, I'll do more extensive testing. I'm using these vertical lines right here to help me keep track of where I am. This is the January 1st, 2019 line, and this line I will move along as I look at the indicators to find my entries. I'm not going to be able to use my drawing tool along with moving these lines. I think using the lines will help you keep track of where I am too. Now I'm using histogram type indicators because my old eyes find them much easier to read quickly. The histogram simply shows where the indicator lines cross. So a histogram move above the 0 line is a long signal, and a move below the 0 line is a short signal for the purposes of these two indicators. So what I'm going to start by doing is moving this line until I find a place where I get a signal. And the first signal is right here. I get a long signal on the Arun. Okay? Now I'm going to find out what my ATR is. As you can see, my ATR is about 104. Okay? So my first target is going to be 104 pips, and my stop loss will be roughly 150 pips. So let's measure this from the close of this candle, which would be our entry point. At what point do I hit 104 pips? Not there, not quite there. So right here is where the target would hit. Now, does it hit negative 160 pips before that point? Well, pushes down to here, which is minus 61 pips. So no, the stop loss would be down here somewhere. So this one will mark up as a winner. So I move to my spreadsheet, which is typically on a different screen, and I add one tally for an Arun win. Back to my chart. I'm going to move this to find the next entry. I'm not worried about whether I would already be in this trade or anything. I'm purely looking for entries and whether they would hit the target or the loss first. So this is a sell signal on the Arun indicator at this point, and the ATR is 59 pips. So our target is 59, so our target is going to be down here, and then 59 times 1.5, or 60 times 1.5 would be 90. So it obviously hits 90 pips right here a couple of days later. So this one would be a loser. So I go to my tally. I mark that down as a loser, Arun a loser. Okay, so I'll move this on over, and here we have Arun buy at the top here. And we're looking for a target of 62 pips. So let's measure 62. At which point will we hit 62? On this candle right here. And of course, obviously it does not go 1.5 ATR below that level. So that is going to be an Arun winner. This is a lot faster when I have these on separate screens. Okay, so we'll move to the right again, and we've got a buy signal on the MACD on this candle. So let's see what our ATR is. 52. So does this move up 52? Yep, this is 54. So this will hit the target on the very next day. So that is a MACD win. Okay, our next signal is right here on the Arun. This is a sell signal. The ATR is 56. So the stop loss would be hit on this candle without hitting the target first. So that's an Arun loser. And you proceed just like that, and so on. Once I do that throughout the whole time period, then I just tally up the results. Any indicator that doesn't give me at least a 50% win rate, I'll drop from my short list of indicators for further testing. There you go. Find trend indicators wherever you can and test them this way, and pretty soon you're going to find some pretty amazing indicators. In the next part of this series, I'll be talking about filtering indicators. You probably noticed that in this little uptrend right here, the Arun actually would have been a pretty big winner if we had filtered out all the sell signals in the midst of this uptrend right here. So we're going to look at filter indicators for filtering out bad trades. Okay, what do you guys think? Click the like button below if you plan on doing some of this strategy testing. Time for me to show you the trade setup on the Canadian dollar Japanese yen. Another Forex setup today, a moving average cross or MAX setup on the Canadian dollar Japanese yen. For an MAX strategy buy signal, the 20 EMA line here in purple must be above the 100 SMI line here in blue, which it is, of course. Then the price has to dip below the 20 EMA, like it is right here. And from here on, we watch for the actual buy signal, which is a candle close above the 20 EMA. So here's the whole trade plan. We will buy a daily candle close above the 20 EMA. On the breaking candle, to enter a full-size position, we want this volume bar to reach all the way up here to the volume average. If it doesn't quite reach the average, but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking the volume and dividing it by the volume average, and you should get 0.75 as your result. If you don't get 0.75, stand aside on the trade. The stop loss will be 1.5 times the ATR, and your first target will be 1 times the ATR. So what does that mean? That means when we get the close above the 20 EMA, that close will be our entry point. On that day, look down here at the ATR, multiply that by 1.5, and measure that distance below your entry, and that will be your stop loss. And then measure 1 ATR above your entry, and that will be your first target. If after entering the trade, we get a candle that closes back below the 20 EMA, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout above the 20 should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When our price hits the first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit, and that position will close automatically when the first target is hit. The second position will only have a stop loss, and that position will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on the Canadian dollar Japanese yen. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, a fundamental principle, a rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 15. It is possible to commit no mistakes and still lose. That is not a weakness, that is life. And that comes from Captain Jean-Luc Picard. Due to the new Star Trek series, Star Trek Picard, which I think is streaming on CBS All Access or something, I found this particular maxim to be appropriate. No, I am not sponsored by CBS, and no, I haven't seen the show yet. But a good friend of mine said it was amazing. Thanks, Greg. To be sure everyone is up to speed, Captain Jean-Luc Picard is a character from the Star Trek franchise, specifically the 80s and 90s series Star Trek The Next Generation. To be clear, I'm old enough to actually remember watching the original series as a kid, and I've been a Star Trek nerd ever since. With that said, Picard is my favorite captain. I believe his combination of class, wisdom, and wit has caused him to rise to the top. This particular statement was spoken to an android character that was failing in his attempts to be more human, and I find this encapsulated my early trading experience to a T. Perhaps you've heard this story, and I apologize if I repeat it too often, but new traders need to hear this. Early in my attempts to be a profitable trader, and before I had totally blown out my first account, I was learning to trade index futures. I had my strategy and I was paper trading. I would get 4 or 5 winning trades in a row. I figured I knew what I was doing, and I would feel like I was ready to try real money. So the next setup I would take on my real money account, and of course it would be a loser. I would be disappointed but determined to get it right, and I would go back to paper. After 4 or 5 winners on paper, yep, I would try it again. And again, a real money loser. Back to paper. You guys see what's happening here? Losers are part of the statistical game here. Had I stuck to the real money account, those winners would have been real winners and would have easily offset the losers. But the whole time I thought I was making mistakes because, hey, if I did it right, it would be a winner, right? Understand this. You can get all the rules right and still lose a trade. That's okay. That's life. That's trading. Trading is never a sure thing. It's always about statistics and probability. So just because you have a loser doesn't mean that you did something wrong. Just because you have a winner doesn't mean you did everything right either. The important thing is to follow your strategy rules, your trade management rules, your risk management rules. If you followed all your rules, then you did it right, winner or loser. And remember our Canadian dollar Japanese yen trade plan here. We're going to buy a daily candle close above the 20 EMA. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And while you're clicking links below, be sure to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. Like I said, look for the link below the video. And be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't forget to click the like button if you plan to try some of my testing techniques. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next Monday.